The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, the soybean trade continues to be the story here in the grains. Another solid day to start off the week on Monday, while corn and wheat were relatively quiet, and we had pressure develop in the cattle market trade. Let's go through things. Joining us now for market analysis, we welcome in John Heimberg with Total Farm Marketing. John, good to catch up with you again. Hope you had a great weekend. I noticed we got a Packers win on Sunday, so that was a little bright spot to our weekend, I would say.
Yeah, it's been about 45 days since we've seen one of those, so it was actually nice to see him kind of play a little football for once this weekend. And we've been spoiled for the last 30 years. Let's just put it that way. Anyway,
it's a good way to put it. Good way to put it. It was nice to see a W under the belt there. And you know what? Hey, maybe some of that Packer green translated into the soybean market again on Monday. I'll use that as a very cheap segue here today. Soybeans continuing the rally, looking pretty good on Monday's trade action, up double digits in beans themselves. John, your take here in this soy complex. I know we got some export sales announced on the Daily Wire Monday. Is it just good money flow here into soybeans that's driving this thing right now?
Yeah, very solid price action in the soybean market again today, coming right off the open from last night's session. It was a combination of things I think coming into play here. First off, obviously, the biggest focus in the market is probably the South American weather. Some of those forecast models continue to turn dry. There is starting to see some ramifications possibly. We're hearing chatter about Mato Grosso and some of the issues that could be going there. Are we seeing some replant? We just got planting numbers. Brazilian beans, 51% planted, slowest pace in the last 3 years. Just shows you, again, the producers are concerned. They need that moisture. Models continue to stay on the drier side. Now, with that, we're throwing a little weather premium into a market that doesn't have much. We still have very good domestic demand with strength in the crush, strength in meal, prices overall kind of supporting this market. But today we did kind of hit the first technical barrier I was watching, mainly focusing on that January contract. We had trend line high across the top of the highs from the summer. Did kind of hold things in check today. So we'll have to see if things can push through here. Do we pause here for a little bit, see what happens with the USDA report this week? It wouldn't shock me. We see a little bit of profit taking for producers. Here's you got yourself a dollar rally in pretty short order. Probably a good opportunity to maybe catch up a few sales in here. So we'll have to see how the next couple of days plays out. Obviously, even with some weather issues, barring an absolute total disaster, there's still going to be a lot of beans coming out of South America. Argentina weather is starting to improve a little bit, so that could get them back up in the production total. And really, the net sum or total picture of beans coming out of South America between Argentina and Brazil, as well as the other countries that produce beans down there, still should keep the global supplies relatively heavy, just maybe tighter than we thought, given from the last couple of years.
Well, John, you mentioned that WASDE report coming up here later this week, and ahead of that, I heard some chatter here the last couple of days, Friday, and maybe even through the weekend. Maybe you've heard some as well. Catching up on some of those sales that you mentioned, some farmers selling, and it feels like maybe with basis hanging in there or improving in some spots regionally, that the feeling is we could see some more activity here ahead of that WASDE report, just in case for some reason USDA decides to reset the table just a little bit here in some wild way that changes this market. I don't foresee that happening, but I just wonder if maybe some folks are going to be cautious and reward this rally here ahead of that WASDE report.
And as a producer, you need to. I mean, you're looking at still the supply run that we got. We got fresh supplies coming through the pipeline. You get a good rally. You got to reward it to some extent in here. And, that's still something that we have to kind of keep watching, though, as we go forward. The the USDA report this week. We're expecting a little touch up on the bean yield. Now, I'm kind of still in the camp that maybe we don't see much of move on the bean yield. Maybe even it softens a little bit in that regard. Just from talking to producers the last 2 weeks, I kept hearing about, boy, this corn was better than I thought. Okay, corn really doing well. Wow, can't believe how much we've got given the amount of rain we got. I haven't heard that on the bean side, and some of those bigger bean numbers just haven't been there. That hot flash over the Labor Day holiday weekend seemed to really kind of put a lid on this bean crop, and it still kind of seems to follow through. So I wouldn't be surprised. Maybe we see that bean yield come down just a little bit. Do think the USDA will probably tweak the demand overall. Their goal right now, it feels like, is trying to keep things around 220 million bushels of carryover. Maybe that's their idea of pipeline. We saw the numbers kind of move that way last month. Wouldn't be shocked that we stay in that same type of vein. Obviously the biggest thing is still going to be what's going on with the demand. You go look at the bean market; it's a very interesting situation. You've got some of the heavier global supplies that we've seen in the last handful of years, but those U.S. supplies are tight. Crushers are bidding up. Obviously, we've got the oil, the oil usage surge, the possible soybean meal demand because of the Argentina crop being so poor. And so it's a combination of things that domestic demand is outweighing the export demand a little bit. And that's where we're seeing some of the push in price. Just wonder where that equilibrium is, where that kind of caps out.
Well, John, on the flip side, we saw beans up another 12, 13 cents on Monday. Corn didn't do anything. And some folks are saying, well, beans are going higher. Why isn't corn going with it? Well, you and I were talking about this before we went on the air here. We just get a lot of corn, and I think that's what it all boils down to. Would you agree with that, John?
Yes, I do. I think this is a lot about the hedge pressure right now and bushels moving. We have producers that were very concerned about their corn crop, didn't make a lot of sales, held on to some supplies because of the weather. Now they're getting better bushels than they anticipated. They need to do something with it, and we're seeing it come to the marketplace overall. And that's some of the reason we just can't get much of a rally here. We've looked at the move we've seen in beans, and corn's put about 10, 11 cents in with the move Friday, and even, being basically steady today. So it's kind of a very disappointing market. We got a lot of overhead resistance at 480, 485 on that December contract. Those areas are going to be real tough barriers to break back through without some type of news. We're still in a window where the demand is not quite picking up on the export front. It's still not that time frame for us for corn shipments or export inspections. We did pick up that sale of corn to Mexico again this morning, which is always nice to see. But those sales are routine, and they really don't move the market because they're not more than the market's anticipating. Again, they're very common sales. Export inspections, middle of the pack today in terms of where we were according to expectations, but this is not the corn shipping window. That's usually after the first of the year. This is the window we're getting beans out. So seeing any movement on corn in here is still positive. So we'll have to see how this plays out this week. If that yield does go higher, the USDA may or may not make some moves on demand. Maybe they hold steady on demand here because we are seeing a little bit of an uptick. What if that South American safrinha crop doesn't come together a little bit further down the road? We're hearing that could be a little bit of a question. So maybe the USDA says this is the place that we can pause for now, at least in terms of export demand adjustments.
What about 24 for quart of beans? We're getting input costs, figured out here, seed, fertilizer, et cetera, as we wrap up our harvest this year. We got insurance prices as well. We got to factor in here and much, much more. Are we getting aggressive on any 24 sales since we have decent numbers on the board for especially beans, but even quart too? What's your thoughts looking out to 24, John?
I was making that recommendation today, talking to some producers. We got over $13 on November 24 beans today. I'm not saying you get out and sell the farm, but this is a window you start dipping the toe in the water, maybe use some hedge to arrive type contracts where you can set that basis later, but at least lock in that $13 board price. Again, get some bushels maybe moving, cover some of those input costs, at least what you may project them out to be. Again, not a heavy sell here, but just get some product moving. If $13 is the worst sale you start with for the entire marketing year, and we see things better from there, we can live with that problem. Again, just historically over the last handful of years, that's just a really good starting point, a good psychological starting point, especially with a report coming this week, because you just don't know what's going to happen there. So obviously, I think it's just a place where you just start getting something moving. On the corn side, like to see a little bit more. Maybe we get into the 520, 525 range. A little bit of disappointing price action today, but we saw a pretty good turn on Friday in that D's 24 chart. Obviously, if November beans for 24 are climbing, that may pull up some those corn prices a little bit. But again, same type of window. We get in the 5.25 area. Probably start looking at some type of a strategy, whether it's building some long-term floors at the $5 level and just hold them, or maybe get some HTAs going or hedge to arrives going and start locking in a little bit of price, and we'll settle that basis up later.
John, the wheat markets as well, factoring in here to the grains, largely just quiet markets. Once again, we just got a lot out there with that cheap Russian crop, et cetera. I think that continues to weigh on the U.S. markets.
Yeah, that's still a big concern, and that's just going to still be the driver of price. Then we get export inspections today, basically minimal, at 73,000 tons in terms of actual movement. So again, not much demand out there for U.S. wheat in this window. Again, we're always competing somewhere else. Now we're hearing Brazil's got a large amount of feed wheat that's getting moved onto the export market this year. That could affect corn as well as a competing grain for the feed side of the equation. Plus obviously, like you said, that Russian crop still comes into play. The Ukraine situation is kind of moving past the entire front burner here in that regard. Just from the pure standpoint, again, it just doesn't seem to be affecting the marketplace. Again, talk about some bombings in Odessa, things of that nature over the weekend, and the market started out the day basically flat or lower, finishing only a few pennies higher.
We are talking today with John Heimberg from Total Farm Marketing as we look back at Monday's market trade action. John, let's go over to livestock. Cattle, a down day in both live and feeder cattle on Monday with triple-digit losses, well over $2. It looked like in all contracts or many contracts. I guess my question to you, short-term profit taking. We saw some profit taking on Friday, though, too. Or is this a sign of a correction downward again in this cattle market? What do you think?
Sometimes you got to go retest some lows to make sure they're good lows. And I think we saw a difficult turn in the retail values the second half of last week in terms of choice carcasses, softer again at midday today. And I think that just brought the sellers right back into the marketplace, overall. So that's still a concern, is what we need to see some retail demand. We need to see it stay strong in this window. Cash trade was firmer last week, so that was still at least a bit encouraging. We just couldn't seem to find any footing. Again, it's just some fun liquidation here. Retest those lows. We'll have to see how things kind of play out. Feeder market was down sharply as well today, triple digits across the board, $3 plus across the board, just like the live cattle market. Again, says they're searching for maybe a retest of those lows. So we'll have to see. To me, it's all about the retail side of things right now. In a window, we should see some strength in that retail market. And like I said, we had a pretty difficult week at the end of the week, watching those retail values fall lower, which maybe in turn will take a little money off the table for the cash market.
Going to be watching, I think, feedlot country here too quite a bit the next couple of weeks ahead as we head towards Thanksgiving, Christmas, and into 2024. What kind of activity we going to get in feedlot country here moving forward? That's going to be a big key for me to watch, I think, John.
Yeah, very much so. I mean, the numbers are still projected to stay on the tighter side. You're seeing that in the well-deferred future prices, even though they pulled back like the rest of the market today. We'll have to see how things kind of come into play at the first part of the year. Obviously, the global economic situation, the economic situation here in the United States, still big factors in all of that. I think maybe that cattle market was a little bit of a beneficiary of the jump in the stock prices last week after the Fed meeting. That brought just some money flow into the cattle market in general. That seemed to take a little pause today, at least with the fairly quiet session. But again, I still like the longer-term picture in the cattle market. But the key there is, as long as the demand can stay in the current place where it is, helping support these cattle prices.
How about the hog market? Fairly quiet on Monday, a little bit of green scattered here and there. We saw some profit taking on Friday, though. What's your take in hogs right now, John?
Consolidation day, basically. We had that strong day Thursday, choppy day Friday, choppy day today, kind of building some consolidation pattern at the top of those strong gains from last week. And we'll have to see where we go from there. I do not like the trend in the cash index, still working softer in here at this time frame. Even though there's still a pretty good premium of the cash index to the December futures, which could lead us a little bit higher. I think right now we need to see one of the two kind of bottom itself out, at least in terms of that cash market, for some money to want to flow back into those front month hogs. Again, longer term, still looking at the summer months, mid 90s, still good value out there in a market that can move around very, very quickly. Make sure producers are thinking about the put side of the equation, safety valve puts, $90 level. Leave those hogs open to the upside.
John, dairy market continues to struggle, continues to be rough. Any notes there? Any bright spots at all in the dairy trade right now, John?
We've seen a fairly big drop in butter prices. We've seen the block cheeses drop 6 cents, or excuse me, barrels are down today, widening that spread between blocks and barrels again, which is usually a sign of more of a weaker market overall. We're down here retesting the most recent lows. Just can't seem to really get any traction. So hopefully this is an area we can hold, just on the technical side, just because of where we are in terms of the price windows. But at the same time, still a little cautious that market. Just can't seem like we can really find some traction, with U.S. prices compared to the globe, as well as just the regular demand that we need here in the United States to keep that product moving and support prices.
John, before we let you go, any final thoughts you would share or reiterate with folks today?
Again, two things that still concern me in both these markets, even with the weather story building. Now, weather premium comes in, it can leave very, very quickly. Make sure you're looking at the bottom line where you are. There's still some value in this market. If you're going to be holding bushels into the spring, whether it's in the soybean market or the corn market, don't forget about those put strategies that are in place. Don't have to spend a lot. Keep a floor underneath this. Again, we still have a carry market. You're looking at 50, 60 cents to July soybeans from here. We got 15 cents to the March contract between December and March. If we just see that slippery slope continue, we can see prices continue to bleed down and challenge that previous month's low, taking that carry out. The producers, you're already taking on enough risk this year. You're taking on the storage risk, your interest rate risk. It'd be a shame to put things in there without some type of device underneath and watch that market fall away from you and kind of get double whammied. So please make sure you're looking at those things. Feel free to reach out. Love to talk, touch base with you, look at different ideas and what some of the possibilities could be.
John, how can folks get a hold of you there at Total Farm Marketing?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com and that website of ours, totalfarmmarketing.com.
John Heinberg, always great to chat with you. Have an awesome week, and we'll talk to you next week.
Sounds good. Have a great week, everyone.
John Heinberg there with Total Farm Marketing. That's going to do it for our episode of Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.